We love to cheer when Superman floors a villain, or when Iron Man blows an entire city block sky high. But there's a brutal truth Hollywood has always swept under the rug. If superheroes actually showed up, the first thing to crumble wouldn't be the villain's headquarters. It would be the global insurance industry. To understand why, we first need to grasp how insurance actually ticks. The principle is straightforward enough. Within a large enough pool of people, only a small percentage will get hit with a house fire, an accident, or property loss in any given year. So everyone else chips in a modest fee, building a shared fund large enough to bail out those unlucky few. That entire colossal system stays afloat on a single foundation. Risk must be predictable. That's precisely why insurance companies keep a dedicated team of actuaries on the payroll. Specialists who pour their lives into estimating how many accidents will strike this year, how many homes will get swallowed by floodwaters, or how many cars will end up in a wreck. They can pull this off because nature and ordinary human beings play by certain statistical rules. But superheroes don't. When Thor summons lightning to bring your house crashing down, insurance lawyers will butt heads until they're gray just to nail down one basic question. Was this a natural disaster? Specifically a lightning strike? Or deliberate destruction of property by a citizen whose permanent address is registered in Asgard? No body of law on Earth was ever drafted to tackle that question. According to a disaster analytics firm, the Battle of New York alone racked up a staggering $160 billion in damages, including $85 billion in indirect economic losses. To put that into perspective, Hurricane Katrina, the most costly natural disaster in American history, ran up only $108 billion. Not a single insurance conglomerate on this planet has the financial muscle to cut a check covering that colossal bill without filing for bankruptcy the very next morning. So, to keep the lights on, insurance companies are backed into a corner, forced to jack up their premiums to outrageous levels. Picture yourself walking into an agency to buy collision coverage for your modest car. The sales rep looks you dead in the eye and asks, in an unnervingly flat tone, which route do you take to work? Do you cut past Stark Tower? If so, your premium shoots up 500% because the odds of Spider-Man commandeering your car as a bullet shield are through the roof. And it doesn't stop there. To keep pace with the new era, the market will churn out the strangest insurance products in the history of humankind. First, sonic wave glass breakage insurance, tailor-made for unlucky residents stuck living next to superheroes whose vocal frequencies carry enough punch to level entire floors. Second, ceiling collapse from impact landing insurance, for cases where saviors have a habit of making a dramatic entrance by cratering straight through your roof. And third, the most bitter of all, life insurance. This policy will flatly turn you down if you happen to get reduced to dust by a Thanos-style finger snap. The legal reasoning they'll throw at you: you haven't actually died biologically. You're merely temporarily non-existent, so no valid death certificate can be issued to trigger a payout. But the drawn-out lawsuits and absurd clauses aren't even the scariest part. The real nightmare is the economic domino effect that kicks in right after. Once people wake up to the fact that those expensive policies can't shield them from the risks they dread most, they'll turn their backs en masse and cancel their coverage. The inevitable fallout: the policyholder base tanks, company revenues nosedive, and reserve funds run dangerously thin. At that point, even when a plain old house fire breaks out, the company no longer has enough money to honor claims. The damage doesn't stop there. Once insurance goes up in smoke, banks will never greenlight a loan for your home, your car, or your new restaurant because your collateral is no longer covered against risk. The result: the entire economy grinds to a halt simply because the gods have a soft spot for playing hero. Once wallets take a direct hit, society will do a complete 180 on superheroes. At first, they get hailed as saviors. But after a handful of battles that flatten houses, write off cars, tear apart storefronts, and send insurance premiums through the roof, that image will quickly sour into economic criminal. People will no longer stand in awe when a car flies overhead. They'll lose it. Hey, that's my car. Who's footing the bill for that? From there, all sorts of bizarre social reactions will bubble up. Startups may rush to cash in by selling private superhero insurance at premiums worth millions of dong a month, bundled with contracts hundreds of pages thick. But odds are those companies will go belly up right after the first battle, because no one can accurately size up just how catastrophic the damages will be. In the wake of that, movements like "no fighting in my neighborhood" may gain traction. Residents throw up protest signs, City councils scramble into emergency sessions, while nobody can figure out whether those signs carry any weight with someone who can punch straight through a building. Finally, to smooth things over, the government is forced to step in. Superheroes looking to cruise through the skies may need to hold a civilian aviation license. Anyone with superpowers operating in the open may be required to carry civil liability insurance. Picture Spider-Man swooping down to rescue a young woman, but his web strips clean the anti-rust coating off a bridge worth tens of billions. Within moments, an insurance claims adjuster is planted at the foot of that bridge, camera raised, snapping pictures of the scene and slapping Spider-Man with a damage invoice. It may kill the mystique, but that could be the only way to keep society from going broke because of its heroes. What starts as a tongue-in-cheek thought experiment actually lays bare a very real truth. Human beings may marvel at extraordinary power, but human society runs on stability, rules, and predictability. When that order gets torn apart by individuals who operate completely outside all ordinary limits, even the most ironclad financial institutions can crumble to nothing. So if one fine day a superhero touches down in your city, don't make a beeline for an autograph. Whip out your phone and check whether your insurance company is still standing. Then grab your things and get out fast, before yet another world-saving battle erupts right over your head.